Now we'll be starting with the warehousing provisions under customs. So as I have already told you in the first chapter that we can present the bill of entry for warehousing. In importation also we have discussed that we can present say bill of entry for warehousing. In case if we do not want the goods immediately, we can deposit the goods either in the public warehouses or in the private warehouses. And for certain special goods, there are what? Notified goods, special warehouses are established. So here we will file say an into bond bill of entry for home consumption, and then on payment of duty, when we want to clear the goods, we have to pay the duty, and then ex bond bill of entry is presented at that time, and we will clear the goods for say home consumption. So the provisions relating to warehousing, they are contained in section 57 to basically provisions, they are contained in section 57 to say section 73A of the Customs Act 1962. So here the important aspect is that you must remember how the provisions relating how you will be calculating interest in respect of say warehouse goods and how you will be calculating the duty liability, that is important. So here there can be say public warehouses, there can be private warehouses, there can be special warehouses. So public warehouses, they are what? Basically licensed under section 57. Public warehouses, they are licensed, they are basically licensed under section 57. Private warehouses, they are licensed under section 58, and special warehouses, they are licensed under section 58A. So basically public warehouses is a site or a building which is licensed by the principal commissioner or commissioner of customs, wherein the dutiable goods may be say deposited. Here dutiable goods, they are deposited. Private warehouse is a site or a building which has been licensed by the principal commissioner or commissioner of customs, basically wherein imported goods, dutiable goods, imported by or on behalf of the licensee can be what? Kept. Basically dutiable goods or say goods imported by licensee, they are deposited. Now the public warehouses and the private warehouses are not under physical control. They are not under physical control. They are basically under record based control. They are under say record based control. They are under record based control and not under say physical control. Special warehouses, they are licensed under 58A. Special warehouses, they are licensed under 58A by the principal commissioner or commissioner of customs, wherein dutiable goods, dutiable goods notified by the CBIC may be say deposited. So which type of goods have been notified? Say here gold, silver or other precious, and say semi-precious metals, and goods which are warehouse are for supply of duty-free shops, or they are to be supplied to as stores to a foreign going vessel or aircraft, or to supply as to foreign privileged persons. These goods can be say deposited here and they remain under physical control. The special warehouses under 58A, they remain basically under 58, say physical control, that is under the lock of the customs department. Now say section 58B, it is dealing with what? Cancellation of the license. So here in case if the licensee, they have contravened the conditions, they have made a breach of the conditions subject to which the license was granted, then the principal commissioner or commissioner of customs then the principal commissioner or commissioner of customs, after giving the concerned person an opportunity of being heard, they may cancel the license. Till the license is cancelled, the warehousing operations will remain suspended. So here the warehousing operations will remain suspended till the say license is cancelled. So till the license is cancelled, the warehousing operations, they will remain suspended, and during that period no goods can be deposited in a warehouse. No goods shall be deposited in a warehouse in such during the period of such suspension, and the warehousing provisions will apply. The warehousing provisions will be applicable in respect of say already deposited goods. No goods will be deposited and no goods can be removed till the inquiry is over whether your license is to be cancelled or not. And in case the license is cancelled, then within a period of 7 days of such cancellation, within the period of say 7 days of cancellation or extended period as may be allowed, the goods, they will be removed either to another warehouse, or they may be cleared for home consumption, or they may be cleared for say export, and here the warehousing provisions will apply for say already deposited goods. So fundamentally section 58B, it is dealing with what? The cancellation of license. Then section 59 is warehousing bond. Section 59, it is dealing with the provisions relating to say warehousing bond. So here we are required to present say bill of entry for say warehousing. At that time we have to execute the triple the amount of duty bond. Therefore it is known as what? Into bond bill of entry. It is known as a into bond bill of entry. So here basically the importer has to furnish warehousing bond plus security for warehousing of goods, or say for transferring the goods from one warehouse to another warehouse. So here he has to execute a bond, and the bond can be consignment wise bond or it can be say general bond. In case if it is a consignment wise bond is what? You have to execute a consignment wise bond. If the duty assessed is say 1 lakh rupees, the bond amount will be triple the amount of duty, that is 3 lakh rupees. Bond amount will be triple the amount of duty, that is say 3 lakh rupees. Then a general bond is say required to be executed. A general bond is required to be executed. Here the AC or DC may permit the importer to execute a general bond. But it is to be remembered that the debit in bond account cannot exceed credit available at any point of time. The debit in bond account cannot exceed what? The credit available at any point of time. The debit in bond account cannot exceed what? The credit available at any point of time. That is to be remembered. So in case a general bond is executed. Now here, when you execute the bond, then they will give order for deposit of the goods in warehouse. And here the bond shall remain in force. Bond shall remain in force even if goods are transferred to another warehouse, or say if title of the goods is transferred, or say title of goods is transferred, then also the this warehousing bond will remain in force. If the goods have been in warehouse, but you have title of the goods have been transferred, then also the bond say will remain in force. Then after execution of bond in section 60, we get what? Permission for deposit of goods in warehouse. When you executed the bond, then subsequently they will give you what? The permission for deposit of the goods in warehouse. Now see, let us see. Section 61 is very, very important. It is very, very important. That is basically dealing with what? Period for which the goods may remain in warehouse and the interest in respect of, say, warehouse goods. Period for which the goods may remain in warehouse. So here, in case if the goods are meant for 100% EOU or say a unit in an electronic hardware technology park or say unit in a software technology park, or if the goods remain in warehouse where manufacturing and other operations are permitted under section 65. So goods, they are for use say in a 100% EOU or say a unit in a electronic hardware technology park, software technology park or warehouse wherein the manufacturing operations are permitted. So here in case of capital goods, as such there is no warehousing period. The goods can remain in the warehouse, till they are cleared for home consumption. They can remain in warehouse till the clearance of such goods for say from warehouse. In case of other goods, they will remain in warehouse till the consumption or clearance of such goods from warehouse. Okay, other goods till their consumption or till their clearance of such goods from warehouse. This is in case of 100% EOU, units of electronic hardware technology park, software technology park, or in that warehouse where bonding of the warehouse is there for where manufacturing and other operations are say permitted. Therefore, no interest will be payable in respect of such goods. Till their clearance or till their consumption. But now this is important. In respect of other goods, other than these, remaining goods are covered here. The warehousing period is 1 year. Warehousing period is say 1 year. The warehousing period is 1 year till the expiry of 1 year. From the date of order under section 60 subsection 1. From the date of the order under 60 subsection 1 permitting removal of goods from custom station for deposit in warehouse. So here in case of other goods, the goods will remain in the warehouse. For a period of say 1 year. 1 year when they have made an order for deposit of goods in warehouse. Till 1 year they can remain in the warehouse. Now here interest will be payable. Remember, though the warehousing period is 1 year, say they have made an order permitting deposit of goods in warehouse. They have made an order permitting what? Deposit of goods in warehouse on say 1st of July. And this is 1 year. Basically this is say 1 year. So though the warehousing period is 1 year, the interest will be levied after the expiry of 90 days. So 30 days for July, 31 days for August, and then 29 days for September. So here after 29th of September, they will be levying interest. So interest will be payable if the goods remain in warehouse beyond 90 days from the date of the order which has been made under section 60 subsection 1. What will be the rate of interest? Rate of interest is 15% per annum. Amount on which interest is payable, it is a duty which is payable at the time of clearance. Duty which is payable at the time of clearance, on that amount, interest will be paid, and period for which interest will be payable, that is after the expiry of 90 days, till the date of payment of duty, on the warehouse goods. So fundamentally this is it, this, and say, in case the duty amount is nil, in that case, interest will also be nil, because duty is payable on interest. When duty is nil, interest will also be nil. In that case, interest will be also be nil. Then section 64, that is dealing with what? Owner's right to deal with the warehouse goods. Section 64 is what? owner's right to deal with the warehouse goods. So here the owner can do what? He can inspect the goods, he can sort the goods, he can show the goods for sale, or he can deal with their containers to prevent loss or deterioration or damage. Owner can inspect the goods, deal with their containers to prevent loss or say deterioration or damage to the goods. He can say show the goods for sale, or he can say sort out the goods. Now in custom bonding is there, and manufacture and other operations are permitted. So here manufacture and other operations are permitted. That is the principal commissioner of customs or say commissioner of customs. They can allow manufacturing and other operations in relation to the warehouse goods. So the principal commissioner or commissioner of customs, they may allow manufacturing and other operations in relation to say warehouse goods. Now see, if we have imported 10,000 kg of steel, kept the same in warehouse, and from that steel forks are manufactured. Say 9,800 kg of steel forks are manufactured, 200 kg is waste. Now what will the tax treatment or duty treatment in this particular case? If entire 9,800 kg of the finished goods is exported, then we get a remission of duty on waste. That is steel content waste is there. We get remission of duty. Either the same is destroyed, then no duty will be payable, or if it is not destroyed, then duty will be payable on say waste form. Here what is happening here is 10,000 kg of steel is imported, 9,800 kg of steel forks are manufactured, and entire 9,800 kg of steel forks are say exported. Then on 200 kg waste, either the same is destroyed, or then no duty will be payable, or duty will be payable if the same has been imported in say waste form. And in case if finished products are not exported but they are sold in the domestic market, then on entire 10,000 kg, import duty will be levied, that of steel. Import duty will be levied of that steel. Then what section 66 provides is, section 66 provides power of the government to exempt imported material from say which are used in say manufacture or say other operations in respect of the warehouse goods. So fundamentally here what they are saying is, here in case if the rate of duty on imported material, say steel, if it is imported, rate of duty is 20%, steel forks is only say 15%. So why will be importing steel? The person will be say directly importing steel forks. So to establish the domestic industry in warehouse, what the government will do? The government has the power to exempt the imported material from whole or part of such excess duty for the purpose of establishment of the domestic industry in the warehouse. So whatever duty is in excess, whole or part of excess duty, the same can be exempted. Section 67 is dealing with what? The provisions of what? Removal of goods from one warehouse to another. Under customs supervision, the goods can be removed from one warehouse to another warehouse also. Section 68, it is dealing with the provisions relating to what? Clearance of warehouse goods for say home consumption. When they will be allowing you clearance, first of all an ex-bond bill of entry is presented, import duty has been paid, whatever import duty, cess and fine, interest and penalties have been paid, and the proper officer gives say an order for clearance of goods for home consumption, then they will allow you clearance of goods. Besides this, relinquishment of title can also be allowed. Relinquishment is allowed in respect of warehouse goods also. At any time before order for clearance of goods. Before order for clearance of goods for home consumption. Before order for clearance of goods for home consumption, and when relinquishment is made, no import duty will be payable. No import duty is payable. Then section 69 is dealing with clearance of warehouse goods for exportation. We are required to present, say, shipping bill, bill of export, export duty, etc. is paid. No import duty will be payable in this case. No import duty is payable. The proper officer will give us an order for clearance of goods for exportation. So fundamentally, any warehouse goods, they may be exported to any place outside India without payment of import duty. Remember, it is without payment of import duty if a shipping bill or bill of export has been, say, presented by us in prescribed form. Export duty, if any, has been paid, fine penalties have been paid, and they have given an order for clearance of goods for, say, exportation. But in case the goods are likely to be smuggled back into India, then they will allow only when you pay the duty or you fulfill such other conditions as may be prescribed. Then in case of volatile goods, there is a natural loss due to evaporation, etc. They can give allowance. So here the goods, basically they are aviation fuel, motor spirit, wine, etc., liquid helium. So these are the goods. In case by natural loss they are evaporating, so government can give what? AC or DC is empowered to remit the duty. To remit the duty. Then the goods will not be taken out of warehouse except as provided in this act. So here the goods will not be removed from the warehouse except as otherwise provided in the act. Now section 72 is very, very important. Now they say goods improperly removed from the warehouse. When the goods will be regarded as improperly removed from the warehouse? When they have been removed in contravention of the provisions of section 71, or they have not been removed after the expiration of warehousing period. Not removed after expiration of warehousing period. They have not been removed after the expiration of the warehousing period, or say they are not accounted to the satisfaction of the proper officer, then it will be, say, deemed removal. And in that case, they will be liable to pay the duty. Whatever duty rate is applicable on the last day of the warehousing period, that duty will be what? Levied if the goods have not been removed from the warehouse on the last day of the warehousing period. Then section 73 is on fulfillment of the warehousing provisions. You have paid the duty, then the warehousing bond shall stand cancelled and the same will be, say, returned. Then section 73A is dealing with, say, custody and removal of the warehouse goods. So all warehouse goods, they will remain in the custody of the person who has been granted license. So they will remain in the custody of the licensee under, whether it's under 57, 58 or 58A, until they are cleared for, say, home consumption or exported, or they are transferred to another warehouse. And the responsibility of the custodian will be what? Say, basically it will be the responsibility of the custodian as prescribed. And in case if the warehouse goods are removed in contravention of section 71, the licensee will be liable to pay the duty. It's a licensee is liable to pay duty, interest, penalty. So in case the goods have been warehouse goods are removed in contravention of the provisions of section 71. So this was all about, say, warehousing provisions which we have discussed here.